Welcome to The Explainer. Today, we're going to tackle a huge question, one that really affects all of us. Is the US dollar's time at the top coming to an end? Let's break it down using insights from some of the sharpest minds out there. And to kick things off, we've got this quote from economist Lynn Alden. Nothing stops this train. So what's the train she's talking about? It's U.S. fiscal policy. And today we're going to dig into our analysis and figure out what this unstoppable force means for, well, your money and for the entire world.
So here's how we're going to tackle this. Think of it like an hourglass. We'll start big, looking at the problem of U.S. spending. Then we'll narrow right down to the nitty-gritty of how the dollar system actually works. And finally, we'll open it back up to look at the huge global consequences of what might be coming next.
All right, first up, the unstoppable spending train. Let's get right into the engine of this thing, which is the massive and frankly ever-growing U.S. government debt.
You know, we hear it all the time from politicians, right? We're going to cut spending. But according to Lynn Alden, a lot of that talk is just theater. The cuts they talk about, they barely even scratch the surface because they're not targeting where the real money's going.
And this chart really shows you why. I mean, look at this. A whopping 85% of all federal spending is basically locked in. It's committed to just a handful of huge programs that are, let's say, politically untouchable. And here they are, the uncuttable four. In politics, they call these the third rails. You touch them, you get zapped. You've got Social Security and Medicare, which seniors depend on. You have the massive defense budget. And then there's the interest on the debt, which you just have to pay. It's not optional. So trying to make real cuts here, it's pretty much a non-starter.
So yeah, trying to fix the national debt by trimming that little 15% sliver of everything else, it's like trying to solve a mortgage crisis by telling people to skip their daily latte. It sounds good, but it's basically a rounding error. It just doesn't move the needle.
Okay, so if the spending is unstoppable, you might be asking, how is this even possible? Well, that leads us right into our next section. It all comes down to a really strange paradox at the very heart of the global financial system. It's something called the exorbitant privilege. Basically, because the entire world runs on US dollars for things like international trade and as their savings, the US gets this incredible, almost unfair advantage. But, and this is a big but, that privilege has a hidden cost, a really dangerous one.
And Alden has a fantastic metaphor to help us understand this. Imagine a boxer who literally can't feel pain. At first, they'd seem unstoppable, right? They could just walk through punches and keep on fighting.
But here's the thing. Pain is a signal. It tells your body something is wrong and you need to change what you're doing. Without that signal, the boxer is just accumulating massive internal damage they don't even know about. And that's what's been happening to the U.S. economy. For decades, this privilege has masked the pain of huge trade deficits and a shrinking industrial base. The country didn't feel the immediate consequences, but the damage was building up. And now, well, it looks like the bill is finally coming due.
Now, whenever this topic comes up, there's always one big counter-argument you hear. Hey, look at Japan. Their debt is way higher than ours, and they're fine. Why can't the U.S. just do what they did? It's a fair question, but as we're about to see, it's a deeply flawed comparison.
First, some context. History shows us there's kind of this danger zone. Once a country's debt gets to around 130% of its total economic output, or GDP, there's a 98% chance it's going to default. And a default doesn't just mean not paying your bills. It can also mean printing so much money that your currency becomes worthless.
But for a long time, Japan has been the one major exception to this rule. They blew past that 130% mark ages ago. And that's why so many people think, well, if Japan can do it, so can the US.
But here's the crucial difference that Alden points out. Japan and the US are polar opposites. When Japan was racking up all that debt, it was doing so from a position of strength. It was the world's biggest creditor nation, meaning the rest of the world owed Japan money. The United States? It's the exact opposite. It's the world's largest debtor nation. We owe the world money.
And that brings us to Alden's killer line here. Japan's no longer Japan, and the U.S. never was Japan. It's such a perfect summary. The situations were never the same to begin with, and now, even Japan's own economic model is starting to show serious cracks.
Okay, so if the Japan model is out, and the current path of spending and debt is unsustainable, what happens next? What does the endgame actually look like for the rest of the world?
Now, the first thing that comes to mind for many people is China, right? But Alden argues that we're not heading for a simple handover where the yuan just replaces the dollar. It's not that simple. For a lot of reasons, from closed markets to a lack of global trust, China just isn't ready, or maybe even willing to take on that role.
So instead of a new world leader, what we're actually seeing is a return to a multipolar world. You know, that period after World War II where the US was the undisputed single superpower, historically speaking, that was the exception, not the rule. We're actually just going back to the way things usually are, with several major powers balancing each other out.
And that brings us to the biggest question of all. If we're moving to this new kind of world, what comes after the dollar?
Again, the easy assumption is that some other currency will just take its place, the yuan, the euro, something. But this is where the analysis gets really interesting. The future might look nothing like the past.
Because the answer to what single currency replaces the dollar is none. There isn't going to be a new king. What's emerging is a totally new system that doesn't depend on one single country's currency.
And this new system seems to be building on two main pillars. First, you have the rise of what are called neutral reserve assets. Think of it as money that no one country can print or control. And second, we're seeing more and more countries making trade deals directly with each other, using their own currencies and cutting the dollar out of the loop entirely.
So what are these neutral assets? Well, there are really two big ones gaining momentum. The first is gold, the ultimate old-school money. Central banks around the world are buying it up like crazy. They're going back to something they know can't be devalued. And then you have the new kid on the block, Bitcoin. It's emerging as a sort of digital gold, a reserve asset and a payment system that exists completely outside the control of any government or bank.
So this is a massive shift, and it really changes the entire game. And it leaves all of us with a really important question to think about. In a world where the very idea of money is changing right before our eyes, what does it truly mean to save? How do you protect your value for the long haul?